GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as satisfying as perfectly flipping a pancake. I'm your host, Jay Hamilton, and today we're sounding the alarms. Indicators are telling us that things are looking good, coming. It's coming. And now is the time to act. That's the key. We're sounding the alarms because now is the time to act. And what should you do? Well, today we're going to tell you exactly what Zeneca is doing with his portfolio. He's reallocating to make sure that he is lined up for the next 12 to 18 months. And who is Zeneca? Well, I'm sure most of you know him, but if you don't, he's the guy who had a $15 to $20 million portfolio at the peak of the last market. So you're going to want to listen up, folks. Zeneca, great to have you back on the show.
Great to be back as always. And yeah, the important word there is peak because I round trip most of it, but hopefully learn some things. And that's what I'm trying to avoid happening again this time around. So
that's why we're here. That's perfect.
Yeah.
That's perfect lead in. Okay. So let's start off with Zen. To give everybody listening some context, you and I were chatting over text last night. We were prepping for today's show. And I was telling you how I'm feeling like a bull in a room full of bears right now. And I think that things are lining up to have a pump at some point. Look, I don't know when it's going to happen. It's going to be July, it's going to be August, September, October. I'm not sure, but I think it's coming, chop until then, I'm sure. But your comment was that your mindset right now is all about reallocating your portfolio and really consolidating. So before we get into what you're planning to do with your portfolio, let's just start with what's your overall thesis right now in the market that's leading you to decide that now's the time to make some major moves?
I mean, obviously the time was months ago. It was probably a better time, but like given where we are now, best time to plant a tree was 20 years ago. Next best time is today. I, like you, am feeling generally bullish about crypto and the future and this bull market. And I think we still have a lot of room to run, but I'm increasingly becoming bearish on non-major coins, altcoins, NFTs, meme coins, etc. Mostly from the perspective of that there's just way too many of them. And I don't think I have an edge in picking the right ones compared to just holding ETH or Sol or Bitcoin or maybe a couple of other tokens. And with that mindset, I looked at my portfolio. I had to take stock recently because of tax reasons and basically look through all that I have. And I realized, even though I've done a bunch of consolidating over the last year, I still have a lot of NFTs and meme coins and just like L2 tokens, like all sorts of random stuff that I maybe don't have as much conviction in as just ETH, for instance. If/when there is this next leg up, next bull market, whether it's later this year, whether it's next, who knows when it's going to come. I think one thing we can all say with a high degree of certainty is Bitcoin will do well, ETH will do well, hopefully, probably Sol will do well. I have a little less conviction in that than the other two. But when you start going further down the market cap list, it's harder to say whether Optimism will do as well as ETH or Immutable X or pick a gaming token. Prime, I'm very bullish on Prime. But like, is that going to outperform ETH? That's like the big question to always keep in mind. And with the amount of tokens there already are, let alone all the new ones that are going to be launching, every day, every week, every month between now and like the end of time, you're not only competing against the existing tokens, you're also competing against the new ones. And I think that generally they're just going to continue to stat market share away from the majors in a way that didn't really exist in previous cycles. In previous cycles, there just weren't as many blockchains, weren't as many tokens, weren't as many NFT type things to be trading. Now there's just near infinite. And I think that that's like my shift in mentality. It's sort of been brewing in my mind for a while that I really just want to be holding the majors more than anything else. Maybe a small, tiny bag to gamble with and play meme coins or something like that. But that's where my head's at. And then there's the time investment required with all of it as well. And there's so much time involved if you want to like have an edge in trading altcoins and meme coins and NFTs and stuff, which I don't necessarily want to be putting in 16-hour days anymore.
I want to come back to something you said, which was very interesting, which is that you have more conviction in ETH and BTC than you have in Sol. Maybe it's the echo chamber I'm in, but I don't hear that a ton. I'll hear a lot more conviction in Sol right now. So I don't want to, but not yet. Let's come back to that. First, can you give us what are you ideally moving towards? Do you have an allocation between the majors in mind? Let's talk first about the majors. Where are you at right now, and what are you hoping to get towards?
Yeah, I haven't yet sat down. I literally landed yesterday and have been running around, but like on the top of my list of things to do is like sit down and decide what I want my portfolio allocation to look like. And then it's like, how do I get there? It is probably something along the lines of, and now if we take my overall crypto portfolio and just looking at that, maybe like 40 to 60% in ETH, probably around 20% in Bitcoin, which is a big difference for me because I've historically never really held Bitcoin. I've always tried to hold other things thinking they would outperform Bitcoin. And then what's that put us to? That's like 60 to 80%. And then maybe like 10, 15% in Sol. And then I'll probably find a couple of other tokens that I do have a lot of conviction in to match those. And some I want to keep in stables as well. So that's like a rough overview. ETH is going to be the biggest bag. And then probably like Bitcoin and Sol might be roughly equivalent, maybe a little more Bitcoin, and then stables and maybe one or two other tokens.
Yeah, which very much lines up with, we did a show a few weeks ago with Kyle where we talked about the 80-20 rule. And you hear a ton about the 80-20 rule in many areas of life. But in crypto, what we really believe is the 80-20 rule is that 80% should be in the majors, which is exactly where you're landing, approximately somewhere around 80% between Bitcoin, Sol, and ETH. And you decide what works best for you, how you want to divvy that up. And then 20% is, whatever you want to go you play with. I would say even for most of the people listening, I would say you should probably be more like 10 to 5% in the others and like 90-95% in the majors. Because as you said, you can't lose with the majors. I mean, I shouldn't say that, but it feels
over a long enough time horizon.
That's lining up. And as you said, the more you own, the more you have to watch and the more you have to trade. And that's very difficult. So let's just go through each of the three majors, why ETH being the most, then why Bitcoin, then why Sol. Give us sort of your thoughts for each one.
ETH, I've just always been incredibly bullish on it. I see how much is being built. People talk about there's too many layer twos. What do all the layer twos have in common? They all settle on ETH. They all bring attention to ETH. It's all Ethereum based. People say, oh, gas costs. People complain when gas is too high on ETH, but also when it's too low. When it's too low, they're like, oh, it's a dead chain. But then you look at Base and other L2s having so many transactions, and it's like, what are you even talking about? I think the tokenomics of ETH are great, ever since it became basically deflationary / not as inflationary. It became very, very appealing from that perspective. Obviously, we have the ETFs coming up basically any day now. There's just, to me, ETH is just the mother chain. It is, obviously, Bitcoin is the granddaddy chain of all of crypto. But in terms of the future, I just feel more bullish on ETH. I think it can do more stuff and have more practical use cases beyond just acting as a store of value or as a currency, which Bitcoin is. So that's why ETH is my biggest bag and probably always will be. Bitcoin is...
Before you go to Bitcoin, ETH ETF, any expectations? Like you said, going to happen later this week, early next week. It seems like nobody knows when. The SEC doing their own thing. But any expectations? There's lots of talk of, will this lead to a pump or will this not? Maybe because markets are choppy right now and maybe it doesn't get the same early adoption that BTC got. What are your thoughts there?
Probably the thing I'm most leaning towards is just looking at what happened with Bitcoin and applying the same thesis here where no one knows what's going to happen, but probably the most likely scenario in my mind is it dumps a bit early on. There's like grayscale outflows and stuff like that. And then over like a few week period, or maybe it's a couple months, it just slowly tends to trend up. I think it's obviously not getting as much attention as the Bitcoin ETFs. That was like everywhere. But I do think there will be, the Larry Fink will be on all the news, the finance shows talking about, hey, there's an ETH ETF now and why that's important. And it'll get publicity and attention and bring hopefully capital to ETH. But because the market is so choppy, I don't really see it being a massive catalyst to the upside, at least in the short term. Long term, I think it's incredibly bullish.
For sure. Okay, let's go Bitcoin.
Bitcoin is that store of value, the traditional inflation hedge, it really doesn't need to do anything. It just needs to survive, which I can't imagine it not surviving. It is the coin that tends to, all other crypto tokens follow it. If Bitcoin it's very rare for Bitcoin to be crashing and other coins to be pumping, especially other majors. And I just think, the more I think about it, the more I think, 5, 10, 15 years from now, there's only 21 million Bitcoin. So many of them have been lost. Do we see a $500,000 Bitcoin? Do we see $1 million Bitcoin? I don't think it's that unrealistic in our life. And I would just hate to have been in crypto for as long as I have been and just own no Bitcoin. I think it's safe. I think it's, as I sort of, A, get older, and B, I guess my portfolio starts to grow again after it crashed so much in the last bear, I'm starting to think more about like capital preservation rather than multiplication or growth as much. And I think Bitcoin it's still high risk as any sort of financial asset class. But within crypto, it's probably the lowest risk outside of, say, stables, obviously. So I want to have a decent bag of that. I think it'll just make me comfortable, help me sleep at night, feel good about having that level of exposure to crypto and Bitcoin. And then Sol I am less bullish on it compared to Bitcoin and ETH. Part of it is tokenomics. Like Sol has emissions and the token supply is increasing in a way that neither Bitcoin or ETH are. So that's just like constant uphill battle, which in a bull market, it really doesn't matter that much. Things go absolutely crazy. But when it's in a bear market, that's when it really starts to make a big difference. And so my mentality for Sol, which has been this way for a year really, has been that it is probably one of the best plays this bull cycle, but it will probably be one of the worst things to hold out of the majors going into the next bear. And if we look at 5-10 years, I'm bullish on it, but less bullish than Bitcoin and ETH. And so from that perspective, I definitely want to hold some because I think it will perform really well this cycle, but I don't necessarily want it to be bigger than my Bitcoin or ETH bags.
Yeah, that's a really good point about the tokenomics of Solar. Definitely a challenge that, and they've admitted that, and they know that they have to address it, but have yet to find any solution there. Okay, so that's your 80-90% in the majors. Gonna do a portfolio reallocation. What are you going to do with the rest? Any idea? Are you going to move it all in the stables? There's no way you're not going to hold anything else.
No, that's very true. I mean, part of the difficulty with all of this, especially for my portfolio, is how heavily I am in NFTs at the moment and have been ever since, because I got in 2021 and NFTs were my big thing. There was a point in 2021 when I think if you look at my crypto portfolio, 99% of it was in NFTs. And ever since then, that number's been going down, either because market's crashing or because I've been trying to sell NFTs and hold other things. Now we're probably sitting at a 30% place right now, which is, obviously if that doesn't work, if I have 30% NFTs, I can't have 50% ETH and all the rest in Sol and Bitcoin. So I need to get that number down. But a lot of them are not super liquid NFTs. They might be like a one of one art or art blocks that haven't traded for a while. And so either I can take like a 50% discount and just like take the highest offer and just take a big haircut and sell them there. Or it's like, this is going to take a lot longer than I might want it to take. I always say if I had a magic wand and I could get like 70% of or 80% of everything I would liquidate, but that's not realistic. And so that's probably going to be the biggest thing holding me back. And so even if I am very aggressive, which I probably will try to be in terms of taking bids, accepting bids and selling and undercutting floors and just like getting out, I will probably still be left with, say, 10 to 15% of my portfolio is sitting in NFTs that are holding value. Things like I want to keep a CryptoPunk. I want to keep Chromie Squiggles. I want to keep my Fidenza. And so like just right there, that's a ton of money, let alone a bunch of other projects that I also want to hold. And so maybe that is like my altcoin bag, and I don't need to hold all sorts of meme coins, and I don't need to hold all sorts of gaming tokens and all sorts of other things. It's sort of like my high risk play is going to be my NFTs. And I've worked really hard over the last couple of years really to get my NFT portfolio into a place where it's really just the things I have like the most conviction in, like the really high conviction plays. I've sold off a lot of the things that I don't have much conviction in. And so, a lot of this I'm figuring out in real time. So just talking it through with you now, I feel like that's probably what's going to happen. An exercise I really like to do as well is to list out every token I have and every NFT if I have the time. And then in an Excel sheet or Google Sheets, and then in another column, rank it in terms of how much conviction I have, usually like low, medium, or high conviction. And then anything I have low conviction in, just immediately liquidate. Anything I have medium conviction in, try to liquidate as well, because why would I hold things I don't have high conviction in? And that's probably what I'm going to do with all of my fungible tokens. And I'll probably end up selling most of them, including things I have decent conviction in. But again, it's at a certain point, you need to be ruthless and you need to take emotion out of the equation. And that's kind of been one of the things that has held me back in the past. It's like I get emotionally attached, especially to NFTs, But also it's tough not to get emotionally attached to fungible token bags when, maybe everyone on Twitter is talking about a coin, or your alpha group chat of friends all bought into a thing, and I want to be along for the ride with everyone, or you just have a lot of conviction in the team, and you think, oh, the team, there's such great people, they're working hard, they're going to do great, but maybe you're missing other macro market factors to take into consideration. So yeah, probably need to be pretty ruthless with selling a lot of other stuff, but yeah.
Not to mention what happens when we hit the euphoric stage of this bull run, right? Assuming we're right and there's the next leg up in this bull run is going to come. The next one's going to be bigger than the first. We're going to, I think, go through 2025 in a really exciting, euphoric way. How do you avoid it then? That's when it's hard, right? That's when it's so easy to get dragged back in. Any tips?
Yeah, that's really tough. That's when I think you have to go one of two ways. One is you just go all in with everyone else, and you're 16 hours a day glued to your computer. You're succumbing to some of the FOMO. You're trying to get 10x's, 100x's. You're in the trenches, so to speak. The other is you just try to sit on your hands. It's really tough, but you're like, all right, I've set my portfolio up. I've got my bags. Yes, people all around me are making 100x's, 10x's, and my portfolio is quote unquote only up 3x, which is crazy good in any sort of conventional metric. Even 20% in a year is crazy good. Yeah. And just meditate, try and find that zen and be happy with it, and go touch grass and get some hobbies and do other things, and enjoy the bull market without over trading yourself to death. Death by 1,000 cuts, I think, is very real in this space. It hurts so many people. I mean, if you look at this year, this last 12 months, Bitcoin and ETH and on the majors, they're up so much money, but so many people in crypto are down in their portfolios from this time last year or from the start of this year, because they tried to, they sold some ETH here and bought an NFT. They sold some SOL here and bought a meme coin. And it's just like all this trading in and out is just bleeding people out. And I fell victim to it as well. I got lucky and hit some stuff as well. So I'm probably up net overall. But again, like if I had just liquidated everything at the start of 2022 and put it all into Bitcoin, I would be doing better now than doing all this other stuff I have, because Bitcoin's done a 3x, 4x.
Yeah. It's, it's the old wisdom of investing, don't fuck it up. But unfortunately, most do. That's just human nature, right? How do you liquidate? I'm just thinking about our listeners who have dead NFTs. How do you liquidate that? Do you have any tips? Is there any, other than what you said already, is there any particular marketplaces you find good, and maybe you try to trade direct? I'm not sure. Are there any ideas you have there, or is there ways to liquidate something so you can at least get the tax benefit? Like, let's say you spent a lot on something and you're like, you know what, I know this is never going to come up, or at least I don't think it's going to come back. Can you do that?
Yeah, you can definitely do the latter one. And I'm learning all about that because I've been thinking a lot about tax lately. But in terms of if you just want to sell and try and get some profit out of, or some salvage some money out of a dead NFT that maybe you bought too high or whatnot. Depends on the NFT, but usually first stop is Blur and just go see like what's the highest offer. Is there a collection offer on this? Even if it's 0.01, maybe it's worth taking that. If there's like a 0.05 offer, but the floor is like 0.2, then maybe you want to list at like 0.16 and just be okay with leaving it out there for a few weeks or even a couple of months. It depends on how quickly you need to liquidate or want to liquidate. One great thing about NFTs is you just never know when a project's going to get a little bit of attention. Someone's going to come along and sweep a bunch of them. And so just always being listed is probably a really good way to sort of get out of your portfolio. But then, sometimes you just have to take really low bids. Or if there are none, if it's like let's say a one-of-one piece of art and it's like this thing is very liquid, no one's even searching for it, no one's really placing bids, you might need to go out there and go on Twitter, go into some art discords and just like try and connect a network and say, hey, is anyone looking to buy a one-on-one by DK or by, just pick your artist. I'm willing to sell it at this kind of a price and et cetera. And maybe you find someone who's willing to buy that. They weren't necessarily looking for it. So like having it listed wouldn't have found them. But now that you come along and you're saying, hey, I've got this great piece and for whatever reason, I need some liquidity, I'm open to offers. That's probably one of the better ways to get rid of some of your like one-on-one art collections. Again, if you want or need to sell it. And then in terms of like the tax stuff, I know that there are sites out there. People have basically built businesses around this whole tax loss harvesting thing where they're like, we'll buy your NFTs at pennies on the dollar just so you can show that realized loss. Or you can even find like a friend to buy it off you, or I actually don't know if that's legal or not. I need to figure that out. But like,
is that legal?
Yeah, maybe not. But like, there's got to be.
Zed,
like,
you want to sell me some of your NFTs, man? I'll buy them off you.
There's got to be a way to like. I mean, and I know that there are to dispose of your assets for zero or near zero, and it is definitely legal because I know a lot. My tax lawyer literally told me that it's something that we can do. So yeah, there's definitely ways to do that, and that's probably a really smart thing to do for people who have a bunch of NFTs that they're underwater on. And maybe they got lucky with capital gains on another area of crypto in this financial year, whatever your financial year is. And you get to the end and you're like, well, I can hope this NFT comes back, or I can sell it for 1 ETH loss or whatever, or sell 50 NFTs for a 0.01 ETH loss, and it all adds up and yeah, find some value that way.
I just imagine our listeners right now and our viewers, and there's two groups. The ones that never bought NFTs are sitting there being like, this is why I never bought NFTs. Like, thank God I said out. And everyone who bought NFTs is sitting there being like, yeah, I'm fine.
Yeah. Yeah. NFTs were, what a wild ride. They gave so much and then they took so much. And
it's the meme coins of this market, right?
Right, exactly.
What did I see the stat the other day that Pumped Up Fun has putting out 500,000 new tokens a month right now? 500,000?
Yeah.
Oh my God. There's millions of meme coins out there.
There must be dozens, hundreds, maybe thousands of bots that like scroll Twitter, and anytime Elon tweets, anytime Biden or anyone tweets, they're like, all right, let's just spin up a meme coin, automatically put it out there, see if it takes off. And it's only going to get worse. That's the crazy part. It's only realistically going to get worse. And that's part of why I'm getting bearish on non-majors. It's just dilution of every other token, basically.
Yeah, I completely agree. When you do figure out your new portfolio allocation, we'll have to get you to share it on the show.
Yeah, definitely.
It sounds like it might take you a few months to get there.
Yeah, hopefully less. Hopefully by the end of this month, I'm there. And hopefully by this time next week, I've at least figured out what my ideal breakdown is, and then I have that goal to work towards by selling off things and just slowly getting there.
All right. Well, next week on the show, you give us your ideal. Give us your ideal.
I can do that.
Whether or not you actually get there. So make sure you guys tune in next week. Same time, same place, every Thursday, with Zeneca on Milk Road, the Milk Road Show. Zen, thanks so much for joining us again today.
Thanks for having me, as always.
In case you missed it, here's what else happened in crypto news today. Ethereum co-founder Vitalik Vitamin C took the stage at Eth CC in Brussels and didn't hold back on his assessment of Ethereum's current state and future needs. He highlighted Ethereum's large and reasonably decentralized staking ecosystem and its vibrant international community as major strengths. He acknowledges challenges like the high barrier to entry for solo staking, which requires 32 ETH, and the technical complexity of running a node. However, he does believe that these issues are solvable, and I would agree as well. He emphasized the need for protocol simplification to enhance Ethereum's robustness, and he wants to eliminate unnecessary complexities and vulnerabilities. He expressed worries about potential 51% attacks, acknowledging that the current defense strategy relies heavily on community coordination and may not be sustainable long term. And finally, as a concrete step towards mitigating attack risks, Buterin proposed increasing the quorum threshold for block finalization from 75% to 80%. If you missed out on Eth CC, make sure you check out Milk Road Twitter. That's out at Milk Road Daily, or follow our newsletter where we are going to be having a full Eth CC rundown in the coming days. That's it for the show today. Thanks so much for listening in, everybody. Have a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.